Welcome, curious minds, to another deep dive. Have you ever found yourself wishing there was, a fast track to truly understanding a complex market?
Yeah, somewhere you could get all the scattered data and opinions, distilled down.
Exactly. Clear, actionable insights.
Hmm.
Well, that's absolutely our mission today. We're taking that direct route right into the fascinating world of commercial real estate.
Specifically in Warren, Michigan.
Right, focusing on what the landscape looks like. Well, right now, in July 2025, we've gathered a pretty substantial stack of sources for you.
Yeah, everything from detailed local market reports
The broader Detroit, Warren, Dearborn metro analyses.
to specialized insights from real estate veterans like Will Upshaw and Beal Real Estate.
And our own extensive notes, of course, our goal. To cut through all that noise
Hmm.
and deliver a really comprehensive picture. What commercial properties are available? What are they truly costing?
What's driving demand?
And all those intricate economic forces playing behind the scenes. So, buckle up, because, okay, let's unpack this. Now, when we talk about commercial real estate data, it's a completely different beast compared to, say, searching for a residential home price.
Oh, absolutely. It's not straightforward at all.
The sheer nature of this data is incredibly diverse, it's fragmented, and frankly, quite challenging to consolidate into one neat, tidy package.
Right. You can't just pull up a simple average for all commercial properties.
No way. Like you might for a single-family home.
The term commercial property itself is just this massive umbrella, isn't it?
It really is. Covering everything from a modest retail storefront,
To a sprawling industrial complex, a multi-story office building.
an apartment complex,
Yeah.
or even just raw land slated for development.
Exactly. And each of these categories, these asset classes, they behave almost like their own distinct ecosystem
Hmm. With unique demand drivers, different financing models.
and their own market cycles, definitely.
So this means that prices aren't just a moving target.
No, it's more like a collection of many moving targets.
Yeah, each with its own velocity and trajectory.
And trying to get a precise, consolidated total for all commercial inventory. Across every single online platform, every brokerage's private listings,
All the off-market deals.
it's monumental.
Hmm.
If not impossible, really.
This inherent complexity, though, that's precisely why a focused deep dive like ours is so invaluable, wouldn't you say?
Absolutely. We're sifting through those disparate pieces of information
Connecting the dots.
and bringing you a coherent, actionable picture that helps you understand the true pulse of the Warren market.
Right. It's about making sense of the whole mosaic.
What's truly fascinating here, and I think what makes commercial real estate such an intriguing field, is precisely that fragmentation you just highlighted.
Mm-hmm.
You're absolutely right. Commercial real estate isn't monolithic. It's a collection of very distinct asset classes.
So we've got industrial.
Right, which includes everything from manufacturing facilities to warehouses, distribution centers, you name it.
Then there's retail.
Yep, storefronts, shopping centers, restaurants,
Office spaces.
ranging from small executive suites to, large corporate campuses.
Multi-family properties, so apartment buildings.
Exactly, of various sizes. And of course, undeveloped land, which holds all that potential for any of these uses.
Right.
The key takeaway here, I think, is that each of these categories serves a really unique economic purpose.
Okay.
And consequently, each has its own set of drivers for demand, its own valuation methods, and its own market cycles.
So, like, right now with e-commerce booming,
Exactly. The demand for warehouse and logistics space in the industrial sector, it continues to be incredibly robust.
right, companies needing efficient distribution.
Precisely. Meanwhile, certain segments of the office sector might still be navigating the shifts from remote work.
Yeah, leading to higher vacancies or maybe a preference for more modern, flexible spaces.
That's it, over the sort of traditional layouts.
That makes sense.
And this nuanced, segmented approach,
Yeah.
well, that's exactly the kind of detailed, specialized market intelligence that experts in the field like Will Upshaw and Beal Real Estate provide.
Mm-hmm.
Their reports aren't just broad overviews. They are specifically tailored for different client needs.
How so?
Well, for instance, their morning reports are designed for renters. They focus on multifamily, retail, and office spaces.
Okay.
They dive into current market trends within those sectors, highlight neighborhood spotlights in the Detroit metro,
Even analyze transportation links.
which are critical for tenants, right? It's vital for businesses looking for the best operational fit.
Gotcha.
Conversely, their afternoon reports, those are meticulously crafted for investors.
Okay. Deeper dive there.
Much deeper market analysis. These reports dissect capitalization rates, they project ROI, return on investment,
And forecast property appreciation trends.
across all investment property types,
Hmm.
industrial, retail, office, multifamily, and land.
Oh,
They're really designed to help investors understand the specific risk-reward profiles of each asset class.
I see.
So the sophisticated segmentation really underscores why we need to approach Warren's commercial market not as one undifferentiated mass,
Right.
but by understanding the distinct nuances and opportunities within each property type. It truly requires specific analysis to grasp what's happening on the ground for any particular buyer, seller, or tenant.
That's a critical distinction, yeah. And it really sets the stage for our dive into the specifics of what's actually available in Warren right now. So if you're a prospective commercial buyer, maybe an investor, or even a business owner looking to expand or relocate, you're going to find a pretty varied selection out there.
Hmm.
However, as we just discussed, the real story emerges when we look at the distinctions between these categories.
Absolutely.
Our sources indicate that as of July 2025, if you cast a wide net, you'd find roughly 74 commercial listings actively on LoopNet.
Which is a major platform, right?
Right. Oh, yeah. One of the largest and most widely used online platforms specifically for commercial property listings in the US.
Okay.
Beyond that, though, there are another 129 commercial properties available for lease or sale across other reputable platforms. Think CoStar, Cruxy.
Hmm. And various local brokerage sites too, I imagine.
Exactly. So, all told, we're talking about over 200 distinct opportunities in the Warren market.
That's a significant pool to choose from, actually.
It is, but as always, the devil is truly in the details.
Always.
So when we break it down by property type, the picture becomes much clearer, much more actionable for you, the listener. For industrial properties, which remain, a consistently hot commodity,
Definitely.
we're seeing around 17 active listings currently for sale.
Okay, 7 key.
And these aren't just empty warehouses. They often include light manufacturing facilities, distribution centers, or maybe specialized R&D spaces.
Right, tailored needs.
Exactly. What's interesting here is that while 17 might not sound like a huge number for a specific industrial use, it represents a pretty solid selection given the specialized nature of these properties and their significant average footprints.
Yeah, that makes sense. It's not like looking for a 3-bed, 2-bath house.
Precisely. Now, moving on to retail spaces, we're currently tracking approximately 20 properties available for sale.
Okay, about 20 for retail.
And these collectively total over 94,000 square feet.
94,000. So a decent amount of space.
Yeah, it could range from small inline units in strip malls to maybe standalone buildings suitable for restaurants or specialized service providers.
So a bit of variety there.
Definitely. While there's selection, the available square footage suggests a market that has options but isn't exactly flooded.
Meaning good locations are still probably quite sought after.
I'd imagine so. Well-located properties are still likely to see good interest. And if your interest lies in office space,
Mm-hmm.
there are approximately 25 active listings on the market right now.
Okay, a bit more than retail.
Yeah, and accounting for over 184,000 square feet in total.
Wow, that's a lot more square footage.
It is. It offers a wide range of choices, from smaller professional suites perfect for a startup or maybe a growing service business.
To larger multi-tenant buildings.
Exactly. The higher total square footage compared to retail indicates, well, more extensive options within the office sector.
Right.
So what these numbers imply, beyond just the sheer volume of stuff available, is a market that offers specific selections within each asset class.
Mm.
For a potential buyer or tenant looking for, say, a very particular size of industrial space with specific loading dock configurations.
Or maybe a retail storefront in a high visibility corridor.
You do have options. However, because of that fragmented nature of the data and the specialized requirements, finding exactly the perfect fit might require more focused searching and, diligent work with a broker.
It's not just a click and buy situation.
Definitely not. It's not an overwhelming flood of inventory that would depress prices across the board, which means that while there's activity, specific, highly desirable niches within the market might still feel constrained.
Especially for premium locations, I bet.
For sure.
If we connect this to the bigger picture of valuations, we really are hitting that moving target you mentioned earlier.
Yeah.
The sheer diversity of commercial property types makes it incredibly challenging to pinpoint one exact median commercial price for Warren as a whole.
Right. You just can't average a small storefront with a huge industrial complex.
Exactly, and expect a meaningful number. However, our sources do provide some incredibly useful benchmarks.
Okay.
These offer deep insight into the market's value proposition.
So what are we seeing overall?
Overall, when you look at the broad spectrum of commercial properties in Warren currently on the market, they're averaging around $161 per square foot.
Okay, $161 a square foot on average.
And crucially, they're coming with an average capitalization rate, or cap rate, of about 7.49%.
Okay, can you break down cap rate for us again?
Sure. So a cap rate is essentially the rate of return on a commercial property based on the income it's expected to generate. It's a foundational metric for commercial investors.
Got it. How's it calculated?
You take the property's net operating income, that's its income, minus operating expenses, but before debt service and taxes,
Okay.
and you divide it by its current market value.
Right. So a higher cap rate generally
And
means
higher potential cash-on-cash return on investment.
Hmm.
But it can also sometimes signal higher perceived risk or maybe a less stable income stream.
Ah, okay. Trade-offs.
Exactly. For a knowledgeable investor, though, a 7.49% average cap rate in a market like Warren offers an intriguing balance.
How so?
It suggests a market with solid income potential that's not overly speculative.
Okay, interesting. Now, what about the specifics? Industrial, retail, office.
Right, let's really drill down because that's where the investment strategies truly diverge.
Mm-hmm.
Industrial buildings, which have consistently shown robust performance across the region.
Yeah, the powerhouse.
They're averaging about $108 per square foot.
$108, lower than the overall average.
Right, and with a median cap rate of 7%.
So that 7% cap rate for industrial, that aligns with their perceived strength.
Perfectly. It aligns with their strength and stability in the Warren market. It suggests that investors are finding healthy, reliable returns here.
What's driving that specifically in Warren?
Well, it's largely driven by Warren's strategic location, its direct access to major automotive supply chains.
Right, the GM Tech Center presence.
Exactly. Those factors create a consistent long-term demand for specialized manufacturing, warehousing, logistics facilities.
Which probably command higher, stable lease rates.
Precisely, making them exceptionally attractive for investors who are prioritizing consistent long-term cash flow and operational stability.
Okay. What about retail?
Retail spaces, on the other hand, are seeing a significantly higher average price per square foot,
How much higher?
around $185 per square foot for properties for sale.
Okay, $185. That's quite a jump from industrial's $108.
It is. And some individual retail properties are even averaging around $695,460 in total price,
Wow.
indicating a range of sizes and locations, of course. But this higher price per square foot for retail often reflects prime locations, high visibility.
The value of immediate consumer access, foot traffic.
Exactly. It speaks to the perceived value of placing a business directly in front of Warren's growing residential base and local economy.
So investors here might be looking more for
Properties in bustling commercial corridors, maybe anticipating capital appreciation driven by demographic shifts and consumer spending.
gotcha and office.
Then we look at office spaces, and here the numbers tell a different, albeit still compelling, story. They're averaging a more modest $61.38 per square foot, roughly.
Yeah, $1.
Okay, much lower again.
Yeah. The median price for office properties is around $567,000, with a median price per square foot of about $81.95. So there's a range depending on the specific property.
But that substantial difference in price per square foot between, say, retail and office, it just highlights how fundamentally different these markets are in their underlying economics and demand.
Absolutely.
Office space might be less expensive on a per square foot basis, but its valuation is heavily influenced by factors like current vacancy rates
The quality and stability of existing tenants.
and the overall demand for flexible or traditional office layouts in, this post-pandemic world, especially among local businesses.
So how do these different price points really influence strategy?
Dramatically. For instance, an investor focused primarily on strong, stable cash flow might prioritize the higher cap rates and intrinsic demand of industrial properties.
Makes sense.
Conversely, someone looking for maybe long-term appreciation, potentially coupled with a value-add opportunity, might eye well-located retail despite its higher upfront per square foot cost.
Okay.
Office investors, meanwhile, might be looking for opportunities to modernize older stock or perhaps cater to specific professional service needs that are less impacted by remote work. Understanding these distinct nuances is absolutely critical for making informed decisions and targeting your investment dollars effectively within the Warren commercial market.
So we've talked about what's out there and what it might cost. That gives us a snapshot of the inventory and its potential value.
Right.
But what truly dictates the strategy for buyers and sellers in Warren's commercial market is the pace. How quickly do these properties actually change hands?
The velocity.
And here we see a fascinating divergence from what many might expect, especially if you're more familiar with the residential
With
market.
this different world.
Because in commercial real estate, that rhythm is a very different drumbeat. Commercial properties, by their very nature, generally take significantly longer to sell than residential ones.
And that's not just Warren, right?
No, not at all. It's a fundamental characteristic across the entire commercial real estate landscape, driven by all the complexities we've already touched upon.
Right.
While getting highly specific commercial days on market data solely for Warren can be a bit challenging.
Smaller transaction volume.
Exactly, compared to residential. But we can look at the broader Detroit, Warren, Dearborn commercial market as a very strong indicative proxy.
Makes sense. What does that show?
Our sources show that as of early 2025, the median time on market for commercial properties in this larger metro area was around 176 days.
176 days.
Okay. And more recently, in March 2025, that number had stretched out further to about 251 days.
Wow. 251 days median time on market.
Yeah. Now let's put that into perspective for you, the listener. Consider Warren's residential market, where homes are typically selling in a brisk, 21 to 23 days?
21 to 23 days versus 251. That is a stark contrast.
Almost unbelievable, right? We're talking about the difference between a few weeks versus 8 months or more to close a deal.
Yeah.
This dramatically longer sales cycle has profound implications for both buyers and sellers in the commercial market.
Absolutely. If you're a buyer, patience isn't just a virtue. It's a necessity.
Yeah, your due diligence period is going to be far more extended. Deep dives into financials, environmental assessments, zoning.
And if you're a seller,
It means you absolutely need a strategic plan for marketing your property and, frankly, realistic expectations about how long your asset might be on the market.
right, you can't just hope for a quick turnover like in residential sometimes.
Exactly. It necessitates a different kind of financial planning and market engagement.
The reasons for this significantly longer sales cycle in commercial real estate are indeed multifaceted.
Mm.
They really highlight the unique complexities in these types of transactions.
Mm.
Firstly, you're dealing with much larger deal sizes, usually,
Right. Millions sometimes.
often millions, if not tens of millions of dollars, which naturally means more capital is required, more financing hurdles need to be cleared.
And there's just a much smaller, more specialized pool of potential buyers.
Precisely. Unlike a residential home, which millions might be interested in, a specific commercial property often appeals to a very narrow, specific type of investor or business user with highly specialized needs.
Okay, that makes sense. What else?
Secondly, the due diligence process. It's far, far more extensive than anything you see in residential.
It's not just a home inspection.
Not even close.
Right.
We're talking detailed environmental assessments to check for past contamination, complex zoning reviews to ensure the property can be used for its intended purpose.
Meticulous analysis of existing tenant leases and income streams.
Extensive financial audits, structural and mechanical inspections that go way beyond a typical home inspection.
Wow. That level of scrutiny alone must add weeks, if not months.
Easily. And financing, too, is inherently more complex.
Really underscores the immense value of, strategic advice and precise market timing.
It really does. That's what comprehensive reports, like those investor-focused ones from Willup, Shaw, and Beal Real Estate, aim to provide.
Right, helping clients navigate these longer, more intricate sales cycles.
Exactly. From initial offer through closing, their strategic advice might involve structuring offers with contingencies that allow for that thorough due diligence.
Well, market timing helps investors understand when a particular asset class or area within Warren might be ripe for acquisition.
Even if it means a longer wait sometimes.
Gotcha.
It's also worth noting, though, that even within this lengthy sales cycle, we are seeing some subtle shifts that bear watching.
Oh, like what?
Well, while 251 days is certainly a long time,
Yeah.
the Detroit MSA commercial days on market actually saw a slight decrease from 293 days in late 2023.
Oh, interesting. From 293 down to 251.
Right. It suggests that while it remains a protracted process, there might be a subtle, potentially improving sales cycle underway.
So maybe improved market sentiment, more clarity on rates.
Could be.
Yeah.
Or a stronger buyer pool, allowing transactions, though complex, to move just a little faster than they were previously.
So it's not a quick market by any means.
Definitely not. But it's
Mm.
one that shows signs of maybe regaining some momentum.
Okay. So with properties taking, 8 months or more to sell,
Hmm.
what about buyer demand? Is there enough interest and capital flowing into Warren to absorb this inventory?
Good question.
The good news here is that buyer demand in Warren's commercial market appears to be quite stable to strong.
That's encouraging.
Yeah, there's a palpable underlying optimism for commercial real estate in 2025, and Warren is certainly participating in that.
Okay.
And perhaps no surprise to anyone who's been following the market, the industrial sector continues to be an absolute powerhouse.
Yeah, we keep hearing that industrial, industrial, industrial.
Yeah. We've seen this trend globally, nationally, and certainly regionally, and Warren is clearly benefiting from it. Industrial properties, whether for advanced manufacturing, warehousing, logistics, they're consistently in high demand.
And what makes it such a powerhouse, and Warren specifically? You mentioned the GM Tech Center.
Exactly. Its fundamental role in the regional supply chain, particularly automotive, its direct access to major transportation arteries, and that massive GM Technical Center presence.
Right. It creates a foundational, enduring demand.
Precisely. Attracts consistent investment for that kind of space. Looking at broader investment trends gleaned from our sources, there's a projection that overall investment sales could increase by up to 10% this year across the wider region.
Okay, a 10% projected increase in investment sales.
Yeah, with a noticeable uptick in capital specifically flowing into industrial
No surprise there.
and multifamily properties.
Multifamily too. Interesting.
Yeah, it tells us that savvy investors are strategically looking for sectors that promise steady, predictable returns or strong growth potential.
So it's not just speculative, it's calculated.
Right, towards resilient asset classes,
Hmm.
land also remains in high demand.
Likely for future development, right? Across various types.
Exactly. Which indicates a strong underlying confidence in Warren's long-term growth trajectory and economic vitality.
Hmm.
Furthermore, the strong residential market in Warren, coupled with rising rental demand, that's creating a healthy economic environment that directly supports this commercial activity.
Right, it's all connected. More residents need more services.
Exactly. As the population grows and incomes rise within Warren, there's a corresponding increased need for retail services, more robust office space for local businesses.
And just a wide array of commercial enterprises to serve that expanding community.
It's a truly symbiotic relationship, isn't it? Where a thriving residential sector fuels commercial opportunities and vice versa.
Absolutely. It means investors are seeing not just individual property potential, but a robust ecosystem that supports continued robust interest in the area.
Okay, so strong buyer demand meets. What about the sellers? What's their motivation like?
That strong buyer demand then meets a somewhat nuanced picture on the seller side. Seller motivation in Warren's commercial market is, well, to put it mildly, it's a mixed bag.
Not everyone rushing to sell.
No, it's not a uniform rush to market, nor is it a complete holding pattern where nobody wants to sell. Instead, you have different strategic plays happening simultaneously.
Like what?
Well, some sellers are clearly adjusting their expectations to the current market conditions. They recognize demand is stable, but the days on market are longer, and financing conditions might influence buyer offers.
So they're being pragmatic, realistic.
Exactly. While highly specific data on seller sentiment solely for Warren is a bit limited,
Mm-hmm.
the general trend across the broader Detroit MSA suggests that some owners might be holding out for what they perceive as optimal pricing.
Especially if they aren't under immediate pressure to sell.
Right. They have strong assets, maybe they're waiting for the ideal buyer with the right terms.
Okay. But conversely,
Conversely, favorable conditions in certain sectors, like that booming industrial market we just discussed, that could definitely motivate other owners to list their properties now.
right, capitalize on that high demand and attractive cap rates.
Exactly. It presents an opportune moment for them to divest and realize gains.
This raises an important question, though, doesn't it? How do higher interest rates factor into seller motivation, especially for those who might prefer to hold?
That's a critical point. For some, challenges with refinancing existing commercial mortgages due to these elevated rates might actually push them to offload properties.
Rather than face significantly higher debt service payments.
Precisely. To give you some context, estimates from various national financial bodies suggest that hundreds of billions, maybe even trillions, in commercial real estate debt are maturing over the next few years across the U.S.
Wow. Trillions.
It's a huge number.
Yeah.
While Warren is a smaller local market, it's certainly not immune to these broader financial currents.
So this wall of maturities.
Right. It means many owners who secured historically low rates years ago are now staring down a very different landscape of significantly higher payments.
Ouch.
For some, this could be the primary trigger to sell, rather than attempt to refinance under unfavorable terms, which could potentially increase inventory in specific subsectors.
So you have this dynamic interplay.
Exactly. Some sellers are strategically listing to ride the wave of a strong sector like industrial, divesting at what they see as a peak.
While others are potentially being pushed to sell by financial pressures related to maturing debt and rates.
Right, looking to avoid a cash flow crunch. It's this delicate balance of voluntary and involuntary listings that significantly informs the overall inventory picture.
So as a buyer, you might find some sellers eager to deal and others very patient.
Absolutely. Which makes a strong case for diligent market research by any potential buyer. Know who you're dealing with.
And speaking of interest rates, they are undeniably a key player. Perhaps the pivotal force influencing everything we've discussed so far.
They really are the cost of capital. They ripple through everything.
So as of July 2025, where do commercial real estate loan rates stand generally?
They're generally ranging from about 5.3% up to maybe 15%.
Wow, that's a really wide spectrum, 5.3% to 15%.
It is, and where a specific loan falls depends heavily on a multitude of factors.
Like the borrower's creditworthiness, financial strength.
The property type itself, a stable industrial asset, often gets better rates than, say, a speculative development.
The loan-to-value ratio.
And the specific loan terms. And the lender, of course. Conventional loans, which are a common financing vehicle, typically fall somewhere between, say, 6.10% and 15.25%.
Okay, now the Federal Reserve, they've kept the federal funds rate steady recently, right?
They have. But there's a strong and widespread expectation of potential rate cuts later in 2025.
And that anticipation alone is a significant driver of market sentiment right now.
Oh, absolutely.
So what does that mean for you, the potential buyer or investor looking at Warren?
Well, lower rates would, quite simply, make commercial property purchases much more affordable.
Lower borrowing costs mean?
Directly translate to higher net operating incomes for investors, potentially higher returns on equity. And it can significantly boost investment activity by making more projects viable.
Right. Increases the appetite for risk, maybe. Increases buying power.
Exactly. Boosts the potential profitability of a given asset.
Conversely, though, the current elevated rates pose distinct challenges.
Definitely. They can lead to higher capitalization rates because investors demand a higher yield to offset their higher borrowing costs.
Meaning they're willing to pay less for a given income stream.
Right. And perhaps more importantly, elevated rates can make refinancing existing commercial mortgages much more challenging.
Especially with that significant number of mortgages maturing this year, as you mentioned, the wall of maturities.
Exactly. Imagine an owner who took out a loan at, say, 3.5% a few years ago, now facing refinancing at 7% or 8%. Their debt service payments could effectively double.
That creates immense pressure on cash flow.
Huge pressure. This scenario is a real concern for many property owners in 2025.
So while there are current hurdles, that strong potential for future rate cuts is definitely creating a more optimistic outlook.
Yes, I think so. For commercial real estate in Warren, it's fueling both speculation and strategic planning among buyers and sellers, anticipating a more favorable environment down the road.
Yeah.
To truly contextualize these forces and give you, the listener, a broader sense of the market's trajectory. Let's briefly touch on some month-over-month and year-over-year changes, mostly across the broader Detroit-Warren-Dearborn metro area.
Right, because granular commercial data for just Warren month-to-month can be elusive.
Exactly. But looking at residential trends often provides a useful proxy for underlying economic health, population shifts, broader supply dynamics, all things that eventually influence commercial activity.
Okay, so what are we seeing there? Let's start with inventory.
Okay. In terms of inventory, the residential inventory in Warren saw a significant 23.8% increase month-over-month from May to June 2025.
Wow, almost 24% increase in residential listings in 1 month.
Yeah, indicates a growing supply of housing.
Yeah.
Which can be, a double-edged sword. More options for residents, but maybe potential softening in the residential market's competitiveness.
Right. And year over year.
If we look year over year, active listings in the broader Detroit-Warren-Dearborn metro jumped by 25% from June 2024 to June 2025.
Another big jump. So even though this is residential data,
it strongly suggests an increasing supply trend across the board. And this could ultimately translate to more options for commercial buyers as well.
How so?
Well, more residents mean more demand for services, potentially leading to new commercial developments. Or maybe investors see opportunities in converting properties, or just general market activity increases overall.
Okay, makes sense. What about prices?
When it comes to prices, residential median homes sold prices in Warren were up 2.5% year over year in June 2025.
Okay, a modest increase year over year.
Yes, although some reports from specific submarkets even showed a higher increase of maybe 14.5%.
Ah, okay. So still strong appreciation in pockets.
Right. This sustained residential price increase overall implies a healthy and growing local economy,
People are moving in, home values are appreciating.
which in turn provides a strong, stable foundation for commercial activity. A robust consumer base with increasing home equity translates to more disposable income.
And greater demand for local retail, services, entertainment, all benefiting commercial enterprises.
Precisely. Now, commercial median prices, as we said, more complex and diverse,
Right, varied asset classes.
but regional data for the Detroit MSA shows median asking prices for commercial properties falling somewhere in the range of $685,000 to $799,000.
Okay, 685K to almost 800K median asking price across all types.
Yes. From smaller retail storefronts to mid-sized industrial buildings, these asking prices reinforce the idea that while valuations are diverse, there's significant underlying value.
Sellers are confident in their assets' worth despite higher rates.
Seems so, and it suggests larger scale investment opportunities are consistently available.
Okay, and what about days on market?
Days on market. Well, residential DOM in Warren showed mixed trends, as you mentioned earlier. But for commercial properties in the Detroit MSA, as we noted, the median DOM was around 251 days in March 2025.
Right, the 251 days.
Crucially, though, that's slight decrease from 293 days in late 2023.
Yeah, that's the interesting shift.
While still undoubtedly lengthy compared to residential, this small but significant shift indicates a potentially improving sales cycle.
Transactions, though still complex, may be moving a little faster.
Perhaps hinting at increased efficiency or maybe a more decisive buyer pool.
So what does this all mean when we pull it together?
So what does this all mean? Overall, commercial mortgage rates remain elevated in July 2025. That's certainly influencing affordability and investment calculations, particularly for new acquisitions and refinancing. But the anticipation of potential rate cuts later in the year is clearly boosting confidence. It's fostering a forward-looking perspective across the market.
And buyer interest.
Buyer interest, particularly in those robust sectors like industrial and multifamily, remains strong year over year, buoyed by the underlying economic health of the region.
And seller motivation is adapting.
Right, adapting to these evolving market conditions. Some strategically capitalizing on high demand, others navigating financial pressures like maturing mortgages.
So the overall sentiment for the rest of 2025?
I'd say it's one of cautious recovery and significant growth potential, despite the inherent complexities and longer transaction times.
A market finding its footing.
Exactly, and continuing to show strong signs of opportunity for those who understand its unique rhythm.
Which brings us squarely to the so what for you, our listener. Why is this specific deep dive into Warren's commercial real estate in July 2025 so valuable, and how can you leverage these insights? Well, whether you're an aspiring business owner looking for that perfect retail storefront to launch your dream,
Or maybe a local entrepreneur considering expanding your operations into a new office or a larger industrial facility.
an investor eyeing the market for a multifamily property or a strategic industrial acquisition.
Or simply someone who is just, insanely curious about your local economy and how its commercial engine is shaping up.
These insights are truly crucial. They move you from being a passive observer to an informed participant.
Absolutely. Knowledge is power here.
Understanding these nuanced details empowers you to make far more informed strategic decisions. For instance, knowing the specific price points per square foot across different commercial property types in Warren, that allows you to set realistic budgets and evaluate deals more accurately.
Right. No sticker shock.
Recognizing the significantly longer days on market compared to residential. That means you'll factor in more time for thorough due diligence and financing.
Preventing rushed or ill-advised decisions.
Exactly. And comprehending the pivotal impact of anticipated interest rate shifts arms you with foresight.
Allowing you to strategically time your entry or exit from the market, perhaps.
Maybe waiting for more favorable borrowing conditions or seizing an opportunity before rates change.
This is exactly the kind of competitive edge that comprehensive sources, echoing the value prop of services like Wilt, Upshaw, and Beal Real Estate, emphasize.
Right, the power of in-depth market analysis and grasping economic indicators.
It's not just about crunching numbers, it's about understanding the underlying story those numbers tell.
It's about leveraging knowledge to, as they say, unlock your real estate potential.
Hmm.
It's about not just seeing the listings, but truly understanding the specific forces that shape their value, the pace at which they move, and the distinct opportunities they present in a market like Warren.
These insights are not just data, they're powerful tools for strategic planning.
Especially in a complex, dynamic, and frankly, incredibly exciting market like this. So, to briefly recap our deep dive into Warren's commercial market for July 2025, we've seen a varied and dynamic inventory across different property types,
Diverse pricing structures reflecting those differences.
unique market drivers for each sector. We know it's a longer game than residential.
Sales cycles stretching into many months, demanding patience and thoroughness.
Yet buyer demand remains robust, especially in that consistently strong industrial sector, signaling ongoing confidence.
Right. And critically, interest rates are the pivotal player. Current elevated levels balanced by strong expectations of future cuts.
Influencing both buyer affordability and seller motivations.
Informed decisions, as always, are built on truly understanding these intricate details and their implications.
Absolutely.
So, given everything we've unpacked today, and particularly that tug of war between elevated interest rates and the strong anticipation of future cuts,
Yeah.
coupled with adapting seller motivations, how might the second half of 2025 reshape investment opportunities in Warren's commercial real estate, especially for those looking beyond the traditional residential market and into more, yield-focused or strategic acquisitions?
That is the question to ponder. Thanks for joining us on this deep dive.